With that, I want to bring in our next guest. That would be Scott Bauer, CEO of Prosper Trading Academy. Scott, thank you so much for joining us as usual. Let's talk a little bit about the setup for today. You had some cooling last week when it comes to equities in particular. What's your expectation for the roadmap for today? Is it kind of across the board, a wait and see kind of day in your view?
I think it is, and I think that obviously the most important thing is not what the Fed does on Wednesday, because they're most likely, going to lower rates by a quarter. What is Powell's tone? He's been very dovish recently, and if he starts to shift that a little bit, if we really start to get kind of the narrative that, all right, now we've got to pull back a little bit, now we've got to wait and see, that could really upset the markets here. And I think that's what people are kind of pulling back and waiting for right now, Diane, and just positioning kind of maybe a risk-off scenario moving forward.
Yeah, and we've certainly seen that kind of pullback after the massive move and risk on after the election. There's certainly been this pattern recently to kind of pull back a little bit. We'll see if that's still the case midweek. But what about when you look at the dollar? It looks like it's this morning, at least it's range bound. Are you expecting that to play out the same way?
I am, although, you've got such tailwinds for the dollar, even though it's off those recent highs. You've got such tailwinds because other central banks around the world are so aggressive with rate cuts, where we might be on the opposite end of that. Again, even though we're going to cut, in a couple of days from now, that rhetoric, that narrative might be, just cooling down quite a bit. So I think that's underpinning the dollar here, and will probably keep it elevated for some time, just because of, if you look at the dollar versus other currencies worldwide here, the dollar is stronger because our central bank, the Fed here, is really not in the same camp as other major central banks around the world.
All right, and let's talk a little bit about gold, because we just dived into that a little bit with Joe Capitone from the World Gold Council. But let's talk in particular about levels. One of the things we've noticed this year, we've seen gold hit record after record. It's up more than 25% year to date. What are the levels you're paying attention to when it comes to gold?
26 and a quarter on the downside is important to me, because that's really getting down a little bit towards the bottom end of that range that we have been in. We've seen this range right around, 2,600-ish or so up to the all-time highs. And, we're in the middle of that range right now, albeit down towards the lower end of that middle of the range. I still am very bullish in gold, and I still think we're very much in a scenario where you buy the dip.
Okay. All right. And then let's pivot and talk a little bit about oil. Crude has been under some pressure today. It looks like some of that is tied to some data that we saw out of China. What are the levels you're paying attention to when it comes to crude?
Yeah, so it's really the opposite of gold, in my opinion, where it's sell the rip, not a buy the dip. So 72 area on the upside here, which I think we almost hit end of the week last week. And I think we'll probably trade down to the 66, 65 area. That to me has been a line in the sand. If we break that, then I think we could actually see a 5-handle, Diane. Is almost, impossible as that sounds. If we break that recent support area, I really think it can fall from here. But this range that we've been in, 65, 72 or so, that's been a really well-defined range. But, we've talked about this, Diane. If you break this down just to the fundamentals of supply and demand without really throwing in, risk considerations for geopolitical events, it's really a sell the rip, in my opinion.
Yeah. Okay. And let's go back to something else that we've talked about before regularly, crypto, Bitcoin. Even though everything else is either range bound or, small steps forward, even small steps back, the Bitcoin bulls are at it again, Scott. And I mean, you saw Bitcoin hit another record yesterday. Yep. What is going on here?
I think the news over the weekend about central banks, really, not being aggressive and really, falling back on their heels, lowering rates has helped that scenario. I think that, maybe we've got to be a little cautious going into our announcement on Wednesday. I think Bitcoin may kind of take a back seat a little bit here. I wouldn't be surprised if after the announcement, if Powell is a little bit more hawkish, or let's say not as dovish, I could see us trading back to that 95 range that we were just at.
Yeah, I do wonder if we'll see him at least not be as dovish, especially given some of the data that we've had come in on inflation. And I know it's more about like the CPI and PPI that we've seen a little warmer. And then what about yields? For instance, the 10-year is a little bit lower this morning, off 3 basis points. Really little movement there as well. What levels are you paying attention to?
Yeah, 450 on the upside here, I think, is a place where people are going to get spooked, and the market may really consider that as saying, okay, it really is time to be risk off a little bit. So we're pushing on that right now, which we've seen volatility in the bond market go from really, really excessive to very complacent, and now it's picking up again here. So we were just at 415 a few weeks ago. Now we're back up to almost 440. I think if we break that 450 area, we could really see a quick downtick in the equity markets. Again, so much is going to be on the backs of what Powell says on Wednesday here, but that's really the level that I'm looking at, because right here, whether we're at 4.25, 430, 440, the market has really accepted that.
Right. Yeah, it seems to be the case. 450, that's the number. Sticking with here, Scott Bauer, CEO of Prosper Trading Academy. Thank you so much, Scott, for your insight.